Hi folks, and welcome back to Meaningful Money. Okay, I'm still back here on Porth Chapel Beach, but I've come down to beach level. If you hear screaming and yelling in the background, that'll be my children having fun while I'm working hard doing this, not having any fun at all. Right, we've covered a whole lot of things you can invest in, and all I'm going to do now is fill in the gaps, just the last couple of things, and three things particularly. So the first one is private equity. Now, we've talked about shares in companies. We've talked about hedge funds, which borrow shares, sell them, and hope to make a profit when they go down and things like that. What private equity does is invests in usually sort of start-up companies, so brand new companies, puts money in. It's a little bit like Dragon's Den, if you can imagine. That's probably the best analogy. Or distressed companies, companies which are in trouble, but which a private equity firm can perhaps put a manager in and build the company back up again and make profit that way. Perhaps you've heard of the term venture capital, often used when talking about tech firms, internet startups and things like that. They want venture capital, people to put in money to give them the working capital they need for the company to take off. So that's what private equity does. It's by definition very risky, because out of those small, distressed or start-up companies, a big proportion of them will fail. But there's enough money in it, because there's always one or two companies which absolutely skyrocket in value to make private equity investing worth doing. But realistically, you or I haven't got the amount of money to do that on any scale. You need tens, hundreds of millions of pounds to be a successful private equity entrepreneur. However, due to the miracle of collective investment, using funds, you can have access to private equity. So that's one of the things you can invest in. Second of our three little things which come into the other category is timber. Well, you all know what timber is, it's wood, right? But timber particularly is a play on the US property market, because the vast majority of US homes are timber framed. So timber, the value of timber as a commodity goes up or down, and it's very closely correlated to the US property market. So it's had a bit of a torrid time of late, but it's another thing you can invest in to diversify your portfolio. The third of our three today is infrastructure. So we're talking toll roads, bridges, airports, seaports. What an infrastructure investor would do is buy those things, and again, you haven't probably got the hundreds of millions of pounds needed to build a bridge, so a fund does that, and you can invest through a fund into infrastructure. With the world developing at a record rate, particularly the emerging markets, South America, India, China, Russia, the need for new infrastructure to connect these massive countries is just going to increase. So infrastructure is probably a hot topic going forward, but that's not a tip. I don't give advice on here. Better put a very big disclaimer on the bottom of this one. But it's just another thing that you can invest in. So we've dealt with pretty much all the basic building blocks now. We've dealt with cash, gilts, corporate bonds, shares, property, commodities, gold as a subset of that, hedge funds, and now these others. So we've dealt with the basic building blocks. So hopefully that's useful. Remember, this whole site is meant to be a sort of like a resource. So if you can't remember what a gilt is, you should be able to go to the right video and find out what it is. So next time, we've finished now with our little mini-series, and next time I'm going to talk about passive versus active investing. Sounds fun? You've no idea. See you next time.